Hey, what's up, everyone? My name is Ale. Welcome back to my world of stocks, and welcome back to my monthly update series where we cover three specific topics. Number one, the current state of the economy and the stock market on kind of a more like macro level. And I let you know how I personally feel about everything that's going on right now. Number two, we talk about what stocks I bought or sold over the past month, which was May 2021. And then finally, number three, we talk about what stocks I'm thinking about buying or selling this month here in June of this year. And of course, if you guys enjoy the series, please consider hitting that like button. It really helps the channel and it means a lot to me. Let's go ahead and jump straight into it. Okay, now starting with part number one, let's talk about the current state of the stock market and the economy. And we'll start with a quick recap on where the market is trading right now and where we are in this economic recovery coming off of the whole global health crisis and the pepperoni lockdowns. We'll take a look at employment, see how businesses are opening back up. We'll talk about the progress of V-Shots and how that's affecting everything too, because I do think that's very important for our recovery. And then we'll also just touch a little bit on the inflationary risks of all of this spending that we've been doing, and I'll give my opinion on how I feel about all of that. Okay, now taking a look at the market, same old story here. We continue to trade basically at all-time highs with the S&P 500 up over 100% in the past 5 years. Practically the same for the Dow Jones, up over 92% in that time. And then the tech-heavy NASDAQ that benefits from people staying home and using technology to kind of live their lives. That one is up the most at almost 180% over that time as well. So absolutely insane performance for the NASDAQ as it too sits right near the top of an all-time high. And as you guys know, I love to use the Shiller P ratio to kind of gauge where we are in the market because it uses the average earnings of the past 10 years and adjusts for inflation. And yeah, we're still deep into that extreme kind of bubble range there. And we're even quickly approaching the highs of the dot-com bubble and have already surpassed those of the Great Recession. That's kind of scary. Personally, I do think times are different now, and we kind of just have to get used to trading at higher valuations or at least above fair value, which we've pretty much done for decades now. But I only show you this to illustrate a point that a correction in the market is probably going to be coming soon, either maybe I would say later this year, or I would guess by at least kind of the first half of next year. I think a double-digit drop would be really healthy for the market, and I think the sooner the better, but the actual time that it happens is very difficult to predict. Until then, though, I think that the market will probably continue to perform well as investors focus on a recovering economy from the huge crash we had last year. V-Shots continue to skyrocket. I mean, the US now has about half of the entire population with at least one dose. That's pretty crazy. I mean, literally half the people you run into on the street now probably have had at least one dose. I mean, that's a huge victory in terms of there not really being any good excuses left for forcing businesses to stay closed or maybe even having to operate at such unsustainably low capacity. So this bodes very well for kind of a reopening of the economy. Still, despite the amazing progress, continuing jobless claims have plateaued. And I know this can get a little controversial and maybe even political, but just in my opinion, I do really think that some of this is being caused by the massive spending we've been doing and the fact that some people get paid almost the same or in some cases even more just to stay home and collect enhanced unemployment benefits. I mean, according to NBC News, job vacancies reached nearly 15 million back in March, which was 5 million higher than the 10 million that we had before all the pepperoni lockdowns even started. And here's a chart of non-farm job openings in the US for the past couple of decades, and we're literally at the highest levels ever, which is leading us to have even lower labor force participation than before the lockdowns, which you can see here. I mean, I really think this is evidence that a lot of people just simply don't want to work because there's definitely a lot of jobs and for some reason they're not getting filled. And for sure, there's a lot of people that are still being forced to not work or are struggling and absolutely we do need to help them. We should help them. But overall, I think that we still need to find better solutions than to just say that we should just keep spending and running the risk of hyperinflation because that could devalue people's wages and savings and that hurts people too. According to Bloomberg, the government is now planning to increase our annual spending budget to $6 trillion, claiming that inflation will stay under control according to them in the coming years. But according to the Wall Street Journal, that's going to bring our debt past the record level that we saw all the way back at the end of World War II, and bring us to 117% spending of our economic output by the 2030s, which would be up from around 100% this year. And again, I understand that we still have a lot of issues, people need help, and we're just trying to boost the economy and help it recover. But we really need to at some point get all of this spending and debt accumulation under control, because if we don't, hyperinflation becomes a much bigger risk, and that can really cause some much worse destruction in the future. Keyword though is future, because I'm still sticking to my prediction that if hyperinflation really takes place and things collapse, the economy collapses, I think the effects of all of that are going to really be felt further down the road a few years from now. Because in the meantime, I think all of this stimulus is actually going to boost the economy. I think we're going to see a lot of growth. I think investors are going to focus on that. And so they're going to be bullish on the market. And I think they're going to drive the stock market higher. That's just my prediction. I don't like to make these predictions. It's impossible to accurately time. But in the kind of short to medium term, I still see more growth for the economy coming out of, through a recovery, and the stock market kind of following suit with it. I do, however, think that there will be a small correction just to kind of balance everything out a little bit. Again, I think that's coming within this kind of next year here. But these things are very hard to predict, so I'm not panicking about any of it. I'm just kind of sticking to my original strategy, which is to invest in good companies, try my best to maintain a stable job, which I think everyone should do. Focus on your career and try to maintain a good job. Try to have extra savings. If you can, put some money away every month, have some savings. Although hyperinflation would kind of hurt that. I guess you can maybe buy property or things like that, but not everybody is rich enough to do that. But anyway, have some savings. And then when a correction or a bigger kind of market crash comes, then that's when I would go in and buy a lot heavier. So right now I still invest in stocks, but I do it more strategically. And I try to invest in good companies and perhaps in kind of smaller amounts a little bit. And as long as I can just kind of still put some savings aside every single month, as long as I can do that, I'm still investing in stocks. And I really just keep it that simple. There's no reason for me to overcomplicate things or overstress myself. To me, the stock market has always just been that simple, and it's worked out for me. We'll see how it goes in the future. Anyway, moving on to part number 2, let's talk about which stocks I bought or sold over the past month, which was in May of this year. And there was actually one stock that I sold, and there was 4 stocks that I purchased, one of which I still think is insanely attractive, so we're going to talk about that. And then another 2 of those 4 stocks that I purchased, 2 of them are actually brand new stocks to my portfolio that I've never purchased ever before. And so now I would normally do part 2 right now, talk about last month, and then I would transition over to part 3, talk about next month, but I'm actually going to combine them this month because of the stocks that we're going to be talking about here. I'm almost certainly going to be focused on these ones going into next month. There's not a new batch of stocks, and sometimes this happens with me, especially when I enter brand new positions. So like I said, I just bought 2 brand new stocks. Whenever I do that, I kind of enter slowly, and then I proceed to purchase more and more in the coming months. So this month, we're just going to combine part 2 and 3. I'm going to talk about the stock I sold and the 4 stocks I purchased, and talk about which ones of those I like the most heading into June, and which ones I'll probably continue to be buying. Okay, well, starting with what I sold in May, there was only one stock in this category, and if you didn't see my recent update video on AT&T cutting their dividend, then you may be shocked to learn that I finally cashed in some profits on AT&T and trimmed my position a little. As you guys know, this is a stock that I've been buying at under $30 a share for years now, especially around the $26, $27, and $28 ranges. But I went ahead and flipped that this month for my trimming, and I sold some of my stock at above $30 a share. Well, this order was like literally exactly at $30. But anyway, that leaves my cost basis now in my E-Trade account in the $26 range. So considering that, plus the huge dividends that I've been collecting over the years, AT&T has given me some very nice returns. Now, overall, I sold around 40% of my position, so close to half, and it dropped from like my 4th largest stock down to around my 9th largest, which I'll show you guys in a future video of my entire portfolio that I'll be doing really soon. But that's really where I feel the most comfortable with owning AT&T. I still like them as a stock. Their dividend is over 7% right now until sometime next year when they plan to cut it by around half. But even then, it'll still be a nice yield of around 3 to 4%. And the business will now be more streamlined, focusing on just their wireless telco and broadband internet services, which are cash cows for them, by the way. So I think it'll be a very profitable company with less debt and some small growth even from the rise of 5G and fiber internet. Plus, as a shareholder, you still get new stock worth a 70% stake in the new combined company of Warner Media and Discovery that will focus primarily on becoming a streaming giant, notably through the HBO Max platform that I actually think has a ton of future potential with all the content they can now put in it from HBO, the DC Universe, Warner Brothers, now Discovery and Animal Planet, and a ton more. I think it'll equate to around 200,000 hours of programming that this combined company will have access to. That is massive. So anyway, the stock isn't bad, but I almost exclusively owned it for the dividend. So you cut that dividend in half, and I'm going to trim my position in half just because I don't want my portfolio to have that much exposure to it anymore. And I probably won't be making any more changes to this position for the foreseeable future. I don't really envision myself selling anymore, but I also don't think I'll be buying either. Okay, now moving on to the purchases. Here in this past month, and that I'll kind of be looking to in the future as well. I actually bought 2 brand new stocks, as well as 2 stocks that are already giant staples in my portfolio. And I'll just quickly get the staples out of the way first, since I've already talked a lot about them on the channel. But the first one is Microsoft, ticker symbol MSFT. And as I've told you guys in last month's video, Microsoft used to be my #1 largest stock, but it ended up falling behind Tesla because I wasn't really buying Microsoft anymore, and because Tesla skyrocketed in recent years, it kind of just overtook it. So I decided to go ahead and buy a little more Microsoft this past month to help close the gap, and I went ahead and purchased those shares at around $239, which looks pretty good since the stock has already climbed by about $10 more since then. And of course, I own Microsoft for its incredible reliability, its very diverse and efficient business, and their amazing financials. This is a giant company that did over $140 billion in sales last year alone, and yet they're still somehow managing to grow by double digits. That's really impressive. By the way, don't sleep on that dividend. I know it's a tiny one at just about 1%, but it's got some very nice growth metrics on it, and I see it as just kind of a nice little added bonus since I would still own the stock regardless. Don't think I'll be buying any more shares at this time though, since it's already so large and I just made it even larger. But then the other staple stock that I went ahead and bought some more shares of was the Chinese e-commerce giant Alibaba, ticker symbol BABA. And just like I told you guys last month, this is a stock that I feel is selling at a massive discount right now. Over the past year, the stock has fallen heavily from a high of about $320 a share all the way down to just about $212 at the time of this recording, which is a drop of well over 30%. And by the way, I didn't even get it that low. I actually bought my shares at around 218 this past month. So 212 looks even more attractive, and I definitely plan to buy more of this one throughout June and as long as it keeps trading lower even into the future. I mean, this is a company that did over 100 billion US dollars in sales last year, and yet they're still managing to grow by around 20 or 30% a year. Obviously, there's cause for concern with any, Chinese stock. You always got to be careful. But man, you're really talking about being able to buy the Chinese version of Amazon right here for such a low price. They literally command over half of the entire market share in China, which is also the largest market in the world at over 50% of all online transactions, and yet their market cap is only a fraction of Amazon's. And don't get me wrong, Amazon should definitely trade way higher than Alibaba, but I only show you this to illustrate the potential of Alibaba stock. I mean, I really think it's gonna double over the long term because I can't imagine them not breaking higher than $1 trillion. They definitely deserve to one day be in that $1 trillion market cap club, at least in my opinion. Okay, so those were the staples, 2 stocks that I'm heavily invested in, with Alibaba being the one that I will probably keep buying here throughout June. But what about the 2 brand new stocks that I just purchased for the first time ever in my portfolio? Well, the first one was Apple, ticker symbol AAPL. This is a stock that I've always thought about buying, but never really pulled the trigger until now. And it was a small purchase to start, just less than 1% of my portfolio. And I kind of did that that so that I could dip my toes and be ready to buy heavier if it drops, since it is already up by almost 400% in the past 5 years and it's trading very high. But when you actually look at it, I think there's a lot to like about Apple, even at these prices. I think I'll probably be buying more in the months to come. First of all, I bought my shares at around 122, so just slightly less than where they are today. But when you look at the stock from the start of this year, they were trading above $145 a share, but have since dropped by close to 15%, despite a ton of good news coming out in the months that followed. For example, Berkshire Hathaway actually increased their stake in Apple despite selling a little, thanks to the fact that Apple buys back so much of its own stock every year thanks to their huge profits, which I'll show you in just a second. And while Apple is heavily reliant on iPhones for around half of their sales, they continue to improve on their diversification efforts and just recently announced a number of even more products that they plan to release in the future, including a VR helmet, AR glasses, and even contact lenses. Not to mention that Target also announced that they'll be doubling the size of their Apple shops in stores, which will help sales even more. Speaking of which, altogether, Apple reported their first ever quarter that broke north of $100 billion in sales in just a single quarter, which is insane to think about. And even crazier is how much of those sales they're actually able to convert into profits. I mean, you're talking over $50 billion a year straight to the bottom line. Most companies can't even do that in sales, let alone net income. And that's led to a gigantic balance sheet that holds over $200 billion of cash, depending on how you calculate it. And it's that massive amount of money and their huge profits that they continue to rake in that makes me think that some big things are still coming for Apple in the future. For example, the number of reports about Apple building some sort of electric vehicle keeps growing every month, and some even talk about how they're investing heavily in autonomous driving, which could potentially turn out to be some sort of robotaxi service as well. All of this is still speculation because Apple is one of the best at keeping their future plans a secret, but those are markets that will be worth trillions of dollars in the future. So even if Apple is able to make just like a tiny little dent in those markets, I mean, it would still be a really big deal for them. Not to mention that all of those profits also help them pay a little dividend as well, which they just grew by another 7%. Like Microsoft, it's not the reason I invest in Apple, but I'm still happy to collect this little kind of added bonus, and one that has some nice growth metrics on it too. Personally, I think Apple is a very solid company, but they're hurt a little by the cyclicality of their business that throws their growth rates around and sometimes causes for a volatile stock. And that's why I chose to dip my toes in very slowly and in a small amount, and then I can readjust my position over time depending on when the stock dips or if any news breaks out about their business that I like. Okay, now finally, the other brand new stock that I purchased last month and will continue to watch very closely in the coming months is one that very few people even know about, but they just barely went public through an IPO about a month prior, and that is Endeavor, ticker symbol EDR, which is the parent company of the UFC, which is the world leader in mixed martial arts. Now, I literally just made a video all about this. It was the video right before this one, so I'll just direct you guys to that one if you want to know more and learn more about it. Just click on my channel. It's literally the video right before this one. But like I said, this is a stock that just recently IPO'd in April for around $24 a share, and it's climbed up to over $33 before correcting back down to around $28, which is where it sits today at about the midpoint of that range, and I went ahead and purchased some shares right around that price. As I said in the previous video, I did this mostly for exposure to the UFC since I'm a huge fan and I recognize that mixed martial arts is skyrocketing in popularity. It's currently the fastest growing sport in the world. And while I do recognize that the global health crisis has really badly damaged Endeavor with sales falling by over 20% last year, things are opening back up now, as is evident with the UFC recently selling out arenas, and they have a lot of other sources of revenue too that I think will bounce back strongly in the future, which I listed in that previous video, including the fact that they own the largest talent agency in the entire world. It's for sure a risky stock. It's going to be very volatile, which is why I barely purchased any shares at less than 1% of my portfolio, actually a lot less than 1% of my portfolio. But over time, I'll definitely be looking for more buying opportunities on this one because I think they have a bright future, especially now that they completely own the UFC. And again, if you want to know more, I highly recommend my last video on it, but it's a stock that I'm excited to keep a close eye on. But anyway, that does it for this month's video. I hope you guys enjoyed it. Let me know down below what you're buying or selling. I always see some very interesting stocks, and definitely, I think I'm definitely going to be talking a lot more about the stocks that you guys list down there in the comment section. So make sure you list them down below. I'm always paying attention to them. I don't always get to reply to all the comments just because the past few months have been crazy for me. I mean, I wish I could tell you guys all the things I've been going through in my life, but things are going to be improving. I know I keep telling you guys that, but I promise there's going to be more uploads. I'm just trying to finish a couple things outside of YouTube, and once those are done, there's going to be great things coming to the channel. You just kind of have to trust me. But thank you for hanging in there, guys. It means the world to me. Thank you for all the support. Hope you're all doing well, and I'll catch you in the next one. Take care. Bye-bye.